Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Kevin Horner will take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. All right, Scott, you've got diverse picks on your list today. The first one on your list today, you've got Chewy. It's under some pressure today, but it's actually got a gain so far year to date. But over the past several years, it's had a bumpy road. So when you think about this now, where do you go from here?
Well, they have earnings at the end of the month, so I don't want to take that into consideration. But when I look at the chart here, the 200-day moving average, that has been tremendous support. So I'm looking squarely at that, and we are right at that 200-day moving average. So this is a real quick trade that I'm looking at, not a day trade, but just going out a couple weeks here. I'm just buying the August 15th expiration 36 strike calls for $1. Again, the only reason I'm doing this is because of that massive support there. I don't want to have anything involved with earnings later in the month. And, Diane, in general, people look for, or they say, I'm waiting for a pullback. I'm waiting for a pullback. And on a day like this, when we get a pullback and you see a significant one, albeit it's just one day, people get hesitant. All of a sudden what they've been waiting for maybe is here now, and they just pull back a little bit. To me, opportunity, and that's why I'm doing this.
Okay, all right. So, Kevin, all right, tell us then what you notice about the patterns in this chart. I mean, I noticed that Scott is avoiding earnings risk, but what are the levels you notice?
Yeah, same things that Scott's calling out here. The 200-day moving average is quite notable. In fact, the last 2 times on the daily 1-year chart, we're going to see moves off the 200-day that resulted in at least 60% upside maneuvers before the retreat and pullback to support. If we go back to basically the very beginning of this chart, about a year ago, we tested the 200-day and moved upward over the course of about 6 weeks, made a 60% move before we pulled back and got below the 50-day. Here, we tested most recently the 200 in April off of the April lows at around 30 and pushed that all the way to the highs we see at around 48. That was a 61% maneuver. Now we are 25% off that peak, hitting the 200-day moving average, but you'll notice we haven't gone anywhere for the entirety of the last week. We are getting a little bit of a green candle today at that 200-day moving average. If nothing else, I think it makes sense to validate that 200-day based on what we've seen in this 1-year trend. And as Scott pointed out, for traders who were thinking, hey, if I got a shot at the 200-day, I should be ready to go, it's harder to do that in the moment, isn't it? I mean, it's always fun to say, yeah, I'd love to be buyer here, but when we get that opportunity, doesn't mean we're ready to go.
All right, Scott, let's talk about your next trade. Like I said, it's a diverse list today. So First Solar is on your list today. The company just put out earnings. They beat expectations. The stock is higher today, but it's, the whole solar space has been challenged recently because of changes that are coming in that sector. But what's your view on, and what's your approach to where you take this next?
Yeah, solar has been one of the more volatile sectors that we've seen because it's in the news quite a bit. We've seen rallies, then we see the administration come out with some news that has maybe hit these stocks. So when I look at First Solar, I think this is an opportunity on this run up here to sell the rip or fade this. And I say that because we're coming up to some major resistance after this nice move up because of earnings. So what I'm doing is I'm going out to the end of the month, August 29th expiration, and I'm just buying a simple put spread, the 170, 160 put spread for $2. And it's really for no other reason than the solar industry, the solar sector, if you will, has just been all over the place. And because of that resistance up there, I'm looking for a bit of a retracement.
Okay, all right, Kevin. Now, what do you notice about this chart for First Solar, especially that resistance that Scott mentions?
Yeah, I was seeing the same thing. Right when 189 was the level we hit intraday today and have pulled back. The interesting thing to me is that support at 165. You got approximately the 50 and 200 ready to cross to the upside, which could be bullish in the intermediate window. But given the shorter term nature of the potential for banging our head on that 189 ledge and maybe reversing course here, I could understand the bearish sentiment or the bearishness willing to trade that that directionally. And the RSI is not exactly validating the recent price move into that 189 either. So the bearishness in the short term makes sense, but pay attention to that 165. That volume node there at the volume point of control, consistent with that 5200, does seem to provide a fair bit of support at 165.
Okay, Scott, I want to send it back to you. You said this is really an opportunity to sell the rip. Tell us a little bit more about how this plays out.
Yeah, I agree exactly with what Kevin just said. You look at that area right there, 165, and you see that that is almost a golden cross area where the 50-day moving average might be moving above the 200. So that's actually my target to the downside. Even though my put spread is the 170, 160, boy, if we get a pullback to that area, even 170-ish or so, this put spread's going to explode. So if we get that pullback, I'm in agreement. I'm taking that thing off there because that could be a pivot to turn back higher.
Okay, so let's talk about the last one on your list. You've got Nano Nuclear Energy on your list. This one is lower today. I'm curious to know, I'm wondering, because I didn't see your full thoughts on this, if this is a buy the dip opportunity, but you tell me, Scott.
Yes, nuclear has been another big sector in the news, and these stocks have been very, very volatile. And yes, to me, it's a buy the dip, but it's a buy the dip because there's some really, really big support right in this area, the 36-ish level or so. So when I look at NNE, it's a bit riskier because they do have earnings on the 14th. So I'm using the August 15th options on this one here. I'm just buying a simple call spread, the 35.40 call spread for $1.10. Great reward to risk on that. My intent would be not to hold this through earnings. So if we get a bounce off of this support area here, I would look to exit this prior to earnings.
Okay, so you are trying to avoid the earnings risk there. All right, Kevin, take us through what you notice about this chart for Nano Nuclear Energy. I know overall it's been an outperformer. It's got some weakness today, but there's broad weakness in the market today.
Yeah, I think that test at the 33 level today, the intraday low comes in at 33.22, and the last time we were down here, we had this beautiful hammer candle that I put the other oval on. So this looks like a very strong zone of support. Under this, certainly some more weakness. But the other thing that really stood out on this chart to me is that very large volume node. Now, it's not the volume point of control, as we call out with the red line down below around 2560, but the range here is notable. And I feel like there's an opportunity for the stock to be kind of stuck 33 to the top of that volume node around 38. It's going to take some pressure to push through that. There is a lot of historical volume at this spot, and it would not shock me at all to see some sideways movement between that 33 and 38 zone over the coming weeks in advance of earnings.
All right, Scott, I want to yield the floor back to you for a final thought either on Nano Nuclear Energy or the broad-based market action that we're seeing today. We are seeing weakness. There are triggers for this, obviously. It's changes on the trade front. And then, of course, we've got that weaker than expected jobs report. You did talk recently not just about, some of the patterns where you've seen if there's weakness, you're buying on that weakness. Tell me about your take now where things stand. And how you view
Sure.
it.
So we've had this discussion before, and I'm going to speak as a trader because that is what I am. And this is a perfect lesson, what we are seeing in the market today, of why you buy your protection when you can and not when you have to. When the VIX is depressed and trading 15-ish, or when overall volatility is depressed, as it has been in the S&Ps, the Qs, et cetera, that's the opportunity to buy that protection. And that is what I teach my students. That is how I trade. So this is a great lesson for anybody watching today, that you never know what to expect. We can't be too complacent. You buy when you can and not when you have to. And that gives you the opportunity then to trade when something happens like this, rather than feeling scared or handcuffed like you can't do anything. Overall, you know what? This is probably more of a one-off for now, this big decline today. That being said, I think we are starting to see some cracks in the economy.
Okay, yep, it certainly seems evident by both the jobs report and that latest ISM data that we got this morning that showed more weakness in the manufacturing sector. All right, Scott, thank you. That's Scott Bauer, CEO of Prosper Trading Academy, and Kevin Horner, Senior Manager of Trading Services, Charles Schwab. Thank you, guys. Have a great weekend.